Good day, this is your European Open Briefing for Friday, September 9th. My name is Michael Frentiades, Chief Economist here at XM.com. These are the key points you should know about today. The ECB disappointed hopes for a QE extension after March 2017. The euro rallied but then backed down. German exports for July missed estimates, adding to the eurozone data misses we have seen recently. Chinese inflation dropped for August, but underlying inflation is steady. And in the calendar, we have UK trade balance, Canadian unemployment, Fed speakers Rosengren and Kaplan. On to the euro. The ECB standing pat gave the euro a temporary boost. The bank was expected to extend its QE program beyond March 2017, but Mario Draghi, the ECB president, said this was not even discussed. Still, the setting up of committees to study improvements in the implementation of the asset purchase program set up some kind of change in December, possibly a change in the mix of securities purchased. Forecasts have not substantially changed, the economic forecast that is, but overall the economic picture seems to be pushing the ECB towards doing something extra. What that is difficult to pin down, but there is pressure in that direction, I believe. On to Chinese inflation. It was the lowest in almost a year, dropped to 1.3%. Expectations were for 1.7%. This was mostly due to food price drops. Non-food inflation appears stable, so inflation deflation is not really an issue. You see with the green line more or less steady. Producer prices also improved, so prices not really worries about prices in China. There was a huge drop yesterday in weekly crude stocks. This boosted oil, which is having a good week following big drops in both the American Petroleum Institute and the Energy Information Agency crude inventory data. Yesterday, I believe the drop in weekly crude stocks was in the order of 14 million barrels. Okay, there were some special reasons behind it, but still it shows that it's an encouraging sign for the oil market. On to the calendar, we have seen disappointment in German exports and imports. We saw exports falling 2.6% rather than rising 0.25%, and imports also falling, which denotes some weak domestic demand. So a smaller than expected trade surplus. We will also have a look at the UK goods trade balance. It's expected to narrow to 11.75 billion from 12.41 billion in June. We're getting July's figures. I think the drop in sterling should show a deterioration in trade balance, contrary to expectations, so that will be interesting to see, kind of sticking my neck out a little bit there. We'll see the data, what will show. And also Canadian employment change. We will see creation of 15,000 jobs and constant unemployment rate of 6.9%. We will also have Fed Governors Kaplan and Rosengren speaking, although most of the market's focus, given the confusion of different and contradicting statements from Fed officials, is on the Fed Troika, which is Chair Yellen, Vice Chair Fisher, and New York President Dudley. So outside these three, we could get some interesting information, but the market might take it with a grain of salt. We'll see, of course. So that's all from me today. Thank you very much for watching and have a great day.